What is up, everyone? This is Warren Howe. Hope you're having a great day as always. Now, today we'll be talking about AirBNB. Yep. This is actually a stock that we are very bullish on since last year. Yep, mid last year, before summer, we were looking at them, and this stock needs no introduction, right? They have brand awareness, they have market share, they're literally living in our minds rent-free. And whenever you guys want to travel, right, whenever we want to travel, the first thing we think of is Airbnb. We think of cheaper rates, better experience. It's all about this, right? So before we continue into today's session, today's video, appreciate you guys can actually smash that subscribe button, smash that like button if you enjoyed this video, to spread the algorithm. It'll be very appreciative. We'll be talking about stocks, empowering each other, educational, content, basically reviewing thesis of companies together and whatnot. Yeah. So let's begin. So Airbnb needs no introduction, as we mentioned, right? The qualitative aspect of this company is just insane, right? Monster TAM, total addressable market, easily acquiring new hosts just like that. So think about it. We need to invest in companies, in my opinion, that is asset light, yeah, have no inventory at all. And these are the models for the future, right? Because they can onboard hosts and actually gather a new addressable market, a new potential market, just by adding on hosts in for free. With a little upgrade on their whole system, they can just onboard hosts easily, and they have now 6 million active hosts around the world. And when we talk about inventory, we compare to hotels. When in terms of rooms, where they have to build a room, high capital intensity, high capital expenditures, high operating expenses, and whatnot. This is a company with, again, needs no introduction, that is just running a technological platform, and all they have to spend in product development. Now, we'll be looking at the income statement as per the 10K, full year 2021, and just looking at the highlights as of Q4, everything is on record profits, right? We've got record profits, not really record ADR, average daily rate, but that has been increasing 20% to 150 $150 per booking. So what is an ADR? Basically, you use that, what is the total revenues per booking divided by the duration of that booking. What does that mean? It means that people are staying longer. It means that people are actually paying more, and that's where pricing power is actually kicking in. So that was compared to a year ago of around 120, before Q4, around $120 per booking. So that has been increasing 20% year over year. That's healthy. And not only that, GBV has been increasing. Gross booking value was 11.3 billion in Q4, representing a 32% growth compared to Q4 2019. Now that's awesome. Yeah. So their quality, on the qualitative side, they have been onboarding hosts, upgrading the system, because they want to get ready for the huge travel rebound. That was mentioned actually before in a video that we did before last year. But think again, despite Omicron, despite headwinds from Omicron, despite headwinds from everywhere in the world, in Malaysia and Singapore and certain countries, right now they're actually opening foreign travel to actually they just have to be tested with a few protocols, and they can actually enter into the country. So what is that telling us? That's telling us that everything is going to be better. People don't give a shit about COVID anymore, Deltacron, Omicron. They're actually very more loose in the restrictions. Travel will be rebounding bigger than ever. I have a couple of US friends, they're telling me that everyone is talking about traveling. So what does this actually entail in terms of our bullish thesis? Whether it's a short-term to mid-term thematic play to a long-term play, Airbnb fits the whole regime, fits the whole thesis. Why? Summer is coming, and normally based on seasonality, their best quarters will be Q3 and Q4. So when summer is coming, everyone is traveling. Yep. So what are the summer stocks that we're looking at? Number one, Airbnb. Right? Airbnb is definitely going to be the most used, if not the most used business in the world during summer, where everyone's traveling. People are actually deprived. They want to look, they want to visit their loved ones outstation, right? No doubt, airplane tickets are actually high, but they don't care. They want to go. They want to travel around the world, especially. So experiences are going to increase. Daily bookings is going to increase. GBV is going to increase, and that's the qualitative side. Now the downloads are actually getting ready for that. Their upgrades are getting ready for that. That's why they can onboard hosts and improve their AI, ML, machine learning operations to just make the place more attractive. So when people think about Airbnb, they think about a better experience. They think about quality control. They think about better experience within that host itself. And very frankly, Airbnb hosts are normally good. And think about a platform that are actually making people millionaires. I know a couple of Airbnb millionaires who has a couple of homes inventory and just be living off, getting off recurring income from Airbnb, right? So this is a type of business that we want to be investing in, that is good for the people, right? Good for people, making millions off this platform for taking care of hosts, right? Good quality control, and again, Airbnb is living on us, there's free market share, free organic growth, right? So in Q4, their financial results was actually 1.5 billion, 38% higher than Q4 2019. They can't really compare 2020 because that was the time where everything was shut down in the pandemic. Q4 net income of 55 million. This company was never profitable. And this is the record for the fourth quarter. Everything's record, right? Record revenues, record profitability, record GBV, not really record ADR, but a little bit off the top. But everything is getting better. So the question is, should we annualize 55 million, or should we just, think that this year they'll be not profitable again? I say otherwise, right? So let's look at the income statement. Basically from 2019, which was actually a good year, right? 2019 was good for the economy, good for businesses, corporate profits. The whole world was normal before the pandemic, and Airbnb made 4.8 billion in revenues. Yeah, but think about it. In 2021, this jumped to a significant amount. And if I get my calculator up here, we got 5.991 minus 4805. 5991 minus 4805 divided by 4805. That is a 25% increase in revenues. And that is not even this is still within where countries are having restrictions. They're not so open anymore. Other countries are actually, still restricted in terms of travel and foreigners, coming into the country. Imagine how will it be like with the travel rebound. So as Brian Chesky says, travel is different. Travel is in a whole new regime now. Their average long-term stays, which is 28 days or more, represents close to 28 to 30% of total bookings. That means people are staying more. They're mixing business with leisure, right? Business with pleasure, and just traveling out there, working. That the whole COVID changed the whole scenario of working from home, working while they travel. They can enjoy while they travel. They can literally, and big companies are actually accepting this sort of this pattern, this characteristic. So that's where they can mix and match leisure with business, and they're actually tapping onto that regime. So this pattern will still be moving forward, paired with people missing their loved ones, going overseas to meet with them, to travel. Airbnb is the way to go, in my opinion. So 5.99 billion revenues, which is awesome. And think about it, in terms of business metrics, this is a platform where everything will be streamlined and declined simply because they are just running a platform. They're running a website. So product development will only be increasing in the beginning, at the starting times of this S curve, right? So think about every business has an S curve. What is the likelihood of product development costs, which is a huge chunk in 2020, which they did not actually discount for because they were getting ready for the whole travel rebound. They were getting ready for upgrades. They need a transitional shift. Airbnb is working like a startup. That's the brilliant thing about these type of companies. So when we look at product development at 1.4 billion, cost of revenue decreasing compared to 2019. I always compare 2019 because that's where everything was actually tippity top, right? More GBV, more users, better economy. So we should be comparing 2019. Product development actually increased, but we actually will see them increasing, but is way significantly lesser than 2020. when hosts and guests alike get familiar with the new system, this will definitely be better. Sales and marketing is actually decreasing, which is really good. G&A is increasing a little bit, but decreased compared to 2020, which is awesome, because no doubt this is a 67 to 70% increase in revenues, but they're decreasing, so they're getting more lean. And all in all, with just looking at the numbers, they're just shy of profitability, right? All they need is a decrease again of 10%, and they can already be profitable from the operating expenses. Yeah. So think about it. The tricky thing when it comes to valuation, though, is that they might be too high for a monster TAM. Yeah? So do they deserve this premium? That's the question. Yeah. Looking at FinViz, their market cap is 105 billion. So they have a monster TAM, onboarding hosts easily, right? Getting addressable market share easily. They can just, a slight upgrade in their platform and website, they can already generate revenue. But do they deserve a premium? And I personally think they do. The only tricky thing is the valuation. So analysts actually have them and getting a forward P of 81. That means they'll reach 1.2 B in profitability. If they were to reach 6 to 7 B in revenues, that will contribute close to 15 to 20% net income. Now I don't know if that's too bullish, because if we work backwards, and we can actually do it here. So we got 105, 850, that's 105 billion market cap, divided by 81.49. We are looking at 1.2B net income. So 1.2B net income, and let's say we peg a 20% increase in revenue from 6 billion, we are looking at 7.2B. Now 7.2 divided by 1.2, we're looking at, let me get my maths right, 7.2 divided by 1.2 will be a 6% net profitability. Well, 60%. I need to work out my maths better. So I'm going to work backwards here. No, it's not 60%, it's actually 6%. So 6% times 432. So 6% net income of 7.2 potential revenues will park them at 432 million. So 1.2B is actually a 16% net income, which is not too far-fetched, right? Not too far-fetched, but it might be a huge jump from 2021 results, because their profitability just reached 55 million. So what I'm trying to say is, if they can reach 7.2B in revenues full year 2022, which is very achievable because that is just a 20% increase, they would have to get 16% net income to reach forward PE of 81. Now the question is, what is the PE that they deserve for this type of monster TAM of a company? What is the PE that is premium, that you are willing to pay? That's the question we need to ask ourselves. I'll be happy to be paying 100 PE for this company, 50 to 100 PE, simply because their growth can still be increasing furthermore. Looking at the geographical standpoint of their revenue recognition, we can still see tons of growth in the rest of the world and in the US itself. Right? So hope you guys got some value out of this today. This is a look into their profitability, their qualitative analysis, what is the record quarter, summer play as a thesis. As further reiterating the thesis, in summer, and especially looking at the trends of the macro environment, is only going to blow up, in my opinion. So hopefully you have been building your own due diligence, and I'll see you in the next video. Thank you.